Hey everyone, welcome back to Corporate Decoder, the place where we break down the really dense finance stuff. And with this latest filing from Coinbase, it's like they've given us a whole new world to explore. A digital frontier where even stocks are now on the menu. Get ready because we're diving deep into Coinbase's 2025 annual report. And it is a wild ride from a crypto giant expanding into a full-blown everything exchange to its financial health, and the risks that come with playing in this fast-paced arena. You know the drill. If you want to understand the real story behind the headlines, you are in the right place. And hey, if you appreciate us cutting through the jargon, smash that subscribe button. We've also got a thriving Discord community for you to join. Link is in the description. Alright, so Coinbase Global Incorporated has dropped their annual report for the year ending the 31st of December 2025. And buckle up because this company is not just about crypto anymore, they are aiming to be the everything exchange. Back in December 2025, they apparently took a major step by expanding their trading options way beyond just crypto to include things like stocks, commodity futures, and prediction markets. Their big vision for this everything exchange is to create one single platform where you can trade pretty much any asset from anywhere in the world. Talk about ambitious. Their mission statement is pretty straightforward: to increase economic freedom in the world, and they are doing it by trying to update the century-old financial system. Coinbase is really pushing the idea of trust and ease of use as their main selling points. They want you to feel secure about your assets, and they are all about making financial transactions super simple. So who are they serving? Well, they break it down into three main groups: consumers like you and me looking to invest or trade in crypto stocks, or futures institutions, which are basically businesses like banks and hedge funds, and then developers who are using their base chain to build new crypto-powered product. Now let's talk numbers, because that's what we're all here for, right? For the year ending the 31st of December 2025, Coinbase reported a net revenue of $6.9 billion. That is a nice chunk of change. Breaking that down, they had $4.1 billion from transaction revenue and $2.8 billion from subscription and services revenue. Compared to 2024's $6.3 billion in net revenue, it shows growth, but let's see if that's translating to the bottom line. For 2025, net income came in at $1.3 billion. That's down from a much higher $2.6 billion in 2024. So while revenue went up, income went down. That's something to dig into, but they also reported adjusted EBITDA at $2.8 billion for 2025, which is a solid number, though also down from $3.3 billion in 24. Let's look at their key business metrics. Quickly monthly transacting users, or MTUs, hit 9.2 million in 2025. That is up from 8.4 million in 2024, so more people are using the platform, which is good. However, assets on platform, which is basically the total value of all the crypto and stablecoins held by customers, actually dropped from $404 billion in 2024 to $376 billion in 2025. This is a 7% decrease, and it seems to be driven by a drop in prices for most assets, though they did see some growth in Bitcoin units. Trading volume stayed pretty steady, increasing slightly to $221 billion in 2025 compared to $189 billion in 2024. But remember, they changed how they calculate this in late 2025, adding half the value of off-platform trades, which makes this number look a bit better than it otherwise might have. Drilling down into revenue for 2025 transaction, revenue was $4.1 billion. Consumer transaction revenue actually dipped by about $107 million. This is blamed on a lower average fee rate, probably because more people are using their advanced trading features, which have lower fees compared to the simple trading option. Institutional transaction revenue, on the other hand, jumped by about $134 million, thanks in part to their acquisition of Deribit. Subscription and services revenue saw a nice jump of about $520 million to $2.8 billion in 2025. A big driver here is stablecoin revenue, which grew by about $438 million. Now, they say this is due to higher USDC balances on and off their platform, but a significant portion of that growth was offset by lower average interest rates. This highlights how sensitive their stablecoin revenue is to interest rate changes. Other subscription and services revenue also grew, likely from more people signing up for their Coinbase One subscription. Looking at expenses, technology and development costs went up by about $202 million to $1.67 billion. This is largely because they are hiring more people for international expansion and new product initiatives. Website hosting and infrastructure also saw a big jump of $93 million. Sales and marketing expenses also shot up by a massive $404 million to $1.06 billion. A huge chunk of this increase is due to higher USDC rewards, likely to encourage people to hold USDC on their platform, and a big jump in marketing programs, including digital advertising and brand spending. They are clearly trying to grow their user base and usage. General and administrative expenses increased by about $319 million to $1.62 billion. This is driven by more employees' professional services like legal advisory work, especially for acquisitions, and a significant increase in customer support costs. Then there are the other operating expenses, and here we see a really big number, a cost of $345 million related to platform. Related incidents, this is directly tied to that data theft incident they disclosed back in May 2025. This incident cost them a lot in voluntary customer reimbursements and direct legal costs, and apparently no passwords or private keys were compromised, which is good, but that's still a massive hit. Now for the wild crypto swings, they saw a huge gain on crypto assets held for investment of $528 million in 2025 after a massive loss of $687 million in 2024. This volatility is a constant companion in this business. They've increased their Bitcoin investments, so that big swing is directly tied to the price of Bitcoin. Overall total revenue was $7.18 billion, up from $6.56 billion in 2024. But with those rising expenses, especially the one-off costs from that data theft incident, their net income took a significant hit, falling from $2.58 billion in 2024 to $1.26 billion in 2025. On the liquidity front, they ended 2025 with a very healthy $11.3 billion in cash and cash equivalents, and over $16.8 billion in total cash equivalents, and restricted cash and cash equivalents. This provides them with a lot of flexibility. They are also meeting all their capital requirements set by regulators, no problem there. One of the biggest strategic moves they made in 2025 was acquiring Deribit, a major crypto derivatives exchange, for a whopping $4.3 billion. They paid a significant portion of that in their own class of stock, which is an interesting way to finance a deal. This acquisition adds a massive amount of goodwill and intangible assets to their balance sheet. They also acquired another company called Echo for $176 million. The report also dedicates a section to cybersecurity, and they are clearly taking it seriously. They detail their processes for detecting, containing, and responding to incidents. However, they highlight that data theft incident from May, with its $311 million cost, really shows the risks in this space and the ongoing legal and regulatory scrutiny they face because of it. Now, of course, there are risks, and they spell them out in extreme detail. The most material risk is the inherent volatility of crypto itself, which directly impacts their revenue. They are heavily reliant on transaction fees, and that means if crypto prices or trading volumes drop, their business suffers. They are also very concentrated in Bitcoin, Ethereum, and stablecoin revenue, so any issues in those specific areas could be a big problem. And then there is the regulatory minefield. They operate in a highly competitive industry with an extensive and uncertain regulatory landscape that is constantly evolving. Any adverse changes or failure to comply with these regulations could severely impact their brand reputation and financial health. This is a huge ongoing challenge for them. Finally, looking at the stock itself, the price of their class, a common stock, can be very volatile. They warn that market fluctuations and company-specific news, including the outcome of shareholder litigation, could cause the stock price to drop significantly. Plus, their dual-class stock structure gives a lot of voting power to their CEO Brian Armstrong and certain trusts, which means your ability as a regular shareholder to influence key decisions is pretty limited. So what's the story here? Coinbase is clearly pushing hard to become more than just a crypto exchange, aiming to capture a larger piece of the financial world by offering a wider range of assets and services. They made some big strategic moves in acquisitions and product expansion, which is great to see. However, the drop in net income despite revenue growth and the significant impact of that data breach highlight the challenges they face. Their reliance on crypto market performance and the ever-present regulatory uncertainty are also major concerns. While they have a lot of cash, which is a definite strength, their growth strategy involves significant spending and integration, which always carries risk. The company is clearly in a growth and investment phase, and their success will hinge on navigating these risks and regulations. Effectively, that's our deep dive into Coinbase's 2025 annual report. What's your take on their move to become an everything exchange, and how do you think they will fare in the long run? Let us know in the comments below. If you found this breakdown useful, do me a favor and hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description, where we break down these filings and much more. Thanks for watching, and well, see you in the next one.